All right, good afternoon. Happy Monday. Welcome to the REI 101 podcast, everything real estate investing. I'm here with my co host, Alberto Medellin. How are you doing, brother?
Doing well, man. I love Mondays. You know that. So, fresh week and lots going on. I'm really excited for this call today.
Mindset Mondays. What a good day. And the weather is lovely and beautiful and nice and all that good stuff. It was pretty cold in Houston today. We've got a very special guest, um, somebody who I've become very good friends with over the years, who's incredibly smart, a lot of experience with real estate investing and brokering. Um, but before we get to our special guest, I want everybody just to kind of hang on the edge of their seats. Albert, what is new in your world? What are your big wins for the past week since we spoke last? I'll put you on the spot.
Oh, good. I'm glad you did. So, I got some phone call this morning that our company that we're using to clear the site where we're building those three single family homes. I talked to him last week, and he was telling me that the city was still having to do some things with the gas lines underneath the street and things like that. That it could take another four weeks probably.
Wow.
He called me this morning. He said they permit got approved, that the city was actually done, and that they're starting the demo today. So that was really great news. We just moved everything up a few weeks. So I was pretty busy this morning ordering the soil test and ordering the topo survey once they're done and updating our architect and our civil engineer on this particular project. So really excited about that. Lots going on this morning. And we ran on Saturday, and I still have not caught up on my accounting work. So I'm still catching up on closing out accounting for 2025. So, but everything's going great.
You got this. You're way ahead of most people.
Yeah,
So,
sure. Sure.
all right, we got Megan Flake from Austin, Texas. Good friend of mine. Megan, thank you for joining us today. There's so much that I've learned from you over the years, and Megan, I can definitely say, and I'm not looking at a script or anything when I say this, but I can say that Megan is definitely somebody who works very hard to be an expert at her craft, and that's part of the reason why we're friends and we've connected because Zig Ziglar said you're going to be an average of the five people you spend the most time with. Someone like Megan obviously strives to surround herself with excellence. That's why we're friends, obviously. But no, all kidding aside, just always looking for ways to get better, always looking for ways to brainstorm, and has been a good sounding board. So, Megan, welcome to REI 101, episode 37. Thanks for being here.
Thank you, Austin. And hello, Alberto. It's so uh, good to see you. And thank you so much for having me here. I really appreciate you guys having me on. And wow, what a great introduction. Thank you. I think the world of you as well, Austin. It's always
Well,
good brainstorming and get something cooking.
well, we know that you're really familiar with how abrupt and how frequently things are changing, not just in Austin or in Houston or but the whole market in general. And just as well as anybody else that it requires us to stay on our toes and to be able to pivot and things are changing a lot. And that's one of the reasons I wanted to have you as a guest, just because we need to be having these conversations because the way that our clients were making money, the way that investors were making 5 years ago, 10 years ago, it just doesn't work the same way these days, does it?
No, no, not at all. I think there's so many different shifts in the market that, if you're hearing about it everywhere, then the bubble's probably already burst and you need to adapt. So I think the name of the game is adapt or die, right?
Adapt or die. Yeah, I feel that. So leading commercial investment sales at Keller Williams. You've obviously been involved in hundreds of millions of dollars of transactions over the career, over your career. Um, why don't you take us back, kind of how you got into to investing in real estate or real estate brokering? What came first, the chicken or the egg?
So real estate investing came first. I started investing in real estate about 18 years ago, and I read a book some of you may or may not have heard of, Rich Dad, Poor Dad.
Hmm.
And I knew that I wanted more understanding of finance than what was modeled and what was taught to me. So I took personal finance as an elective in college. I read Rich Dad Poor Dad. I was part of the poorest book club ever. Myself and my two friends, John and Adam, we all lived at different cities. So we would buy one copy of a book and then we would mail it to each other. So it was like 3 months before you could talk about the book when everyone has finally read it. But Rich Dad Poor Dad broke my mind. And that is when I bought my first investment property. I had a tenant to house hack before I had even closed on it.
Mm.
So um, someone connected me
You
with
said you had
a,
a tenant to house hack? Is that what you said?
yes. So I house hacked by moving into the property and then having my tenants pay my mortgage.
Boom. And
Yep.
what year
So
was that? You said 18 years ago, so
I
2020,
think I did that in
2007.
2007. Yep.
Those
Yeah.
were the days.
So at the top of the market, I bought a property. I sure did. And I knew that I wanted to do something slightly differently. So I bought a house in escrow. I used the county money for a bond. I used the city money for the down payment. I took several different courses. I got a lot of things really well set up because I just kept talking to people and asking questions. Um, And yeah, my roommate paid for 70% of the mortgage. I wasn't completely living rent free, but I was very happy.
So it was a
I kept
single
my
family house and it was just you and a roommate at the time? You didn't
Yep,
have a family at
yep.
that time? Okay. Wow.
I didn't have a family at that time. Yeah, I was single at the time when I did this. And then about a year, almost a year into owning the house, that's when I met my husband, and he was doing something very similar. He had his net worth tracked in a spreadsheet, just like I did. He was house hacking. He had two roommates that were paying his mortgage, and he also had Rich Dad Poor Dad on the bookshelf. So we were really well aligned as far as finances went. And we had both bought basically at the top of the market in 2000. He was 2006, I was 2007. So they
Wow.
started to correct after we got married. And so, you know, as Robert Kiyosaki says in Rich Dad Poor Dad, it's much easier to go bankrupt and go all in when you're young. So we bought another house while the market was still correcting. So
You brought up net worth tracker. You met him. Y'all fell in love over tracking net worth. That's just such a beautiful thing. Can
I
you?
mean, who doesn't though, honestly?
I know, right? I mean that's amazing. What's the correlation between tracking your net worth and buying real estate? Is there a connection there?
Oh, for sure. So the beautiful thing about real estate is even if you're breaking even
Hmm.
and like the property is not a cash flow positive at all, someone else is paying off that debt, and paying off that debt is increasing your net worth.
Yeah.
So you're leveraged, unlike in the stock market. You have a very difficult time getting into the stock market leveraged. Um, in real estate, you can get in with 5 to 20% down and then have someone else buy the rest of the house for you.
Mm, yeah, that's powerful.
That is. Yeah, absolutely. Um, so so what happens next? So you get married, you have a house, have a roommate, you're house hacking, your husband's house hacking. What's your next move there?
We both move into one house. We have the other house. We wait for 6 months until it is considered a asset in your debt to income ratio for a loan. And then we apply for the next mortgage in one of our names, and then
Hmm.
the fourth mortgage in the other person's name, and we leapfrog.
Mm.
Nice.
How many properties did you accumulate with that process? With that?
We got up to five, and then we started doing like a return on equity analysis.
Hmm.
return on
Hmm.
investment's great, but after you've owned a property for 3, 5, 18 years,
Hmm.
it's really the return on equity,
Hmm.
in my opinion. I mean, it
And
doesn't matter how much it's cash flowing. I know I continue to bring things back to the stock market, but if I could make more in the stock market, it's not so great of a real estate investment for me anymore.
Right. Exactly.
mhm.
You mentioned something that I hadn't heard anybody say before. You used going back to that first property. Explain the city and the city fund, the bond money.
Mhm.
Can you elaborate on that a little bit? And is that a strategy that still exists?
So this was in a city in Florida. It was in Pensacola, Florida.
Hmm.
And at the time, the city was offering first-time home buyer assistance if you took a first-time home buyer class through the city. And then the county was offering bond money. So I got a loan from the county that was a full point lower than what I would have been able to qualify for
Hmm.
myself. And there are still some programs through various cities and counties and municipalities. You just have to go ask and look into it. Um, the way I found out about I knew about the county money, and the way I found out about the city money was I was in my friend's bar at 11 o'clock at my night. And my dad always said, like, nothing good ever happened after 10 o'clock. And so I was like, guess what I just did? I just got a down payment for a house at a bar. So it's in my friend's Irish pub, and he worked for the city, but he worked for a different part of the housing department that
Hmm.
offered money for low income people to fix their house to be able to stay in their house. So he introduced me to someone else that worked at the city for their down payment program for first time home buyers.
Okay, so that wasn't an investor. That was because you were a first time home buyer. So it's not
Yes.
something that you could duplicate.
Not, no. And I don't think that program exists in the city anymore. I would have to check. It's been a little while since I've lived there. And it's always worth to ask. There's so many different things and so many different resources that if you
Yeah.
start really digging into different places, especially with the help of AI, like you
Hmm.
can research those programs so much faster.
Yeah, and we do get a lot of people on the call. We get a lot of people that come to our happy hours that are younger, like single guys or small families that, can probably do the house hacking thing that haven't bought their
Mhm.
first property yet. And what a easy way to get started buying a little duplex or fourplex, renting out the other units, or like you did, buy a single family home with a roommate. And in your case, your roommate covered 70% of the mortgage. So
Mhm.
that's very powerful. That's very powerful so congratulations, good for you. So this is all those years ago. So talk about how you transitioned because um going into commercial real estate eventually, like what was your pathway to getting to that point?
Well, have you ever played Monopoly?
I'm the best. I'm undefeated at Monopoly. Cannot be beaten.
And not be beaten. Well, that means that you're probably trading in a lot of houses for hotels. Am I right?
Yeah, as soon as I can. I get a monopoly
Yep.
on. Actually, what I do is I put four houses on as many properties as possible because you can get a monopoly on houses in Monopoly, and then
Yeah.
nobody else can buy houses.
You can.
That strategy is very
Jeez.
effective.
So you just buy all the houses and put them in your land.
I just buy all the
Um,
houses.
yeah, yeah. So kind of like in Monopoly, when you trade in your houses and get a hotel, that's what we started doing. We started looking at how to get a better return on our equity, and it looked like commercial real estate.
Hmm.
So we started 1031 exchanging, taking advantage of that tax code and um, trading things into commercial real estate.
So you went into commercial real estate investing before you went into brokering.
Actually, at the same time,
Okay.
I got my first investment the same year that I got my license. So I purchased my first one about 5 years ago, and that's when I got my license. And they always say the best person to help serve is, you know, the younger version of you.
Yeah.
So helping people restructure and think about their residential investments and putting them into commercial because it's more profitable or more elegant. I know in the Austin market, our property taxes eat your profits alive.
Right.
So for a single family house, generally you have to put 30 to 35% down as a
Hmm.
down payment just to break even in a single family house in Austin. So as a long-term rental.
Yikes.
So to cash flow positive, you have to have a lot of equity in that property. And this goes back to that return in equity.
Hmm.
So I'm now in three different states. My investments are. I'm in Texas and South Carolina and Florida. And so I look at South Carolina and Florida as the cash flow states. They don't appreciate so much as Texas does, but the properties in Texas appreciate much better over the course of the investments. We started investing in Texas 11 years ago.
Okay.
And the appreciation has just been much better. We're able to do a cash out refinance, take some of that money, go buy another house in South Carolina. The cash flow is positive
Hmm.
with 20% down. And so there's a lot of different ways for your money to make other money babies. It's just
Money.
being open and really looking at the numbers and looking at those numbers is best to do on a spreadsheet. You can see what the return is over time.
That's awesome. That's awesome. Albert, did you have something?
Yeah, I was just interested in understanding what type of commercial properties investments did you get into to
Mm.
start, and what's your portfolio look like today?
Sure. So the commercial side of my portfolio is all in Texas. I have a small multifamily that I own in a tertiary market. It's called Cuero, Texas.
Mhm.
I also have a triple net land lease in Texas as well. So I own the land, and someone rents the land from me to put a billboard on it as my favorite piece of real estate. Can
Mhm.
I tell you, just getting a check once a year is fantastic. I'm not even responsible if a hurricane blows that sucker over. Someone else has
Hmm.
to go pick it up. I don't own the billboard.
Wow.
And then we did a 1031 exchange into a syndication in Houston.
So like a much larger, 150 doors, things like that, like larger apartment complex thing.
Exactly. I think it's 280.
Okay.
And that was a syndicator that we have known, my husband and I have known that gentleman for over a decade. So
Mm.
Yeah.
we knew and vetted him for a very, very long time before we moved into that syndication.
Yeah.
Very
And,
interesting.
and that's another show for another time,
Yeah.
syndication,
We'll
vetting
Yeah.
syndicators. Yeah.
we'll have to have you
Yeah.
come back on the when we do that episode because that's a strategy uh that we've looked into a little bit. I haven't done
Mhm.
it yet, but it's certainly a viable strategy, and a lot of people are making tons of money with the syndication route, whether it be in your case, one of the investors in the syndication. There's also a lot of opportunity with the fundraising side of the syndication too. If one so has the stomach to do so, it is a bit grueling and it's a bit scary, but when you do it, it's pretty incredible. So
Yeah. So our syndication's performing okay. We made our money going into the syndication. That 1031 exchange, we considered what that capital gains tax would have been,
Mm.
considered that already a payment ahead of time. And then we also bought in 2023,
mhm.
and because the syndication closed in 2022, we were able to exercise bonus depreciation of 2022's year instead of 2023. So we got 100% bonus depreciation instead of the 80% we would have gotten.
Oh wow.
So that also was part of the tax maneuvering. So being able to get another 20% of bonus depreciation, we literally made the money going into it.
You
Okay.
must have a good accountant, don't you?
Yeah.
I my husband's a stockbroker.
Okay.
So we
That
are
helps too.
always talking and nerding out money. And he does a really good job of interviewing our CPA and also our tax preparer. And we have changed a couple of times over the years. As we've grown, we had to level up our team too. So I
Hmm.
have a really good counterpart to make sure that we are both speaking the same goals financially.
Well, I think that helps. Albert, you know this just as well as I do, how important it is to have your spouse on the same page as
Mhm.
you and have alignment with goals. So, Megan, we want to talk about lifestyle goals versus portfolio goals. So,
Mhm.
before I ask the main question, as you transition from the investment side into the brokering side, did your business initially start off inclined toward investors? Were your early clients investors at that time?
I did. Yeah, I took on a lot of investors at the time, and it was a wild ride because I didn't realize that even people who had been investing as long as I had didn't have like a really clear investing thesis.
Okay, explain that a
So,
little bit more because you're probably speaking
yeah.
to a lot of people on the call.
Yeah. So a buy box, what is your current buy box? And maybe it's not an asset class like single family houses or hotels
Hmm.
or warehouses, but knowing what your return you're looking for is, or, people say value add. There's a lot of different ways to do a value add. And so flipping a property isn't the only way to doing a value add. You can also
Yeah.
buy something that is renting way below the market. And that's literally a financial value add.
Hmm.
So people who are not clear on what they're looking for and what they bring to the table, um, I spent a lot of hours in conversation with a lot of investors,
Yeah.
and I thought it would be a better idea to bring people more into a room. So I host a group of women who invest in Austin, and it's 1,200 women. So we meet once a month, and anywhere from 10 to 50 people will show up depending on the topic.
That's that's amazing. So like the whole value add, people say that, and it's like you're saying like, what do you actually mean when you say that? Because people, that's one of those terms that investors throw around, and then when you ask them to explain what that means,
Mhm,
they could be all over the place. But even to go a
mhm,
little bit deeper into that, like, why is that important? Like, it's not the end
mhm.
all to be all, because at the end of the day,
Right.
your investors just want to make more money with less hassle.
They do. Absolutely. Sure. And I think another good question is, what's the last value add project that you did so that you kind of have at least
Yeah.
a blueprint?
Yeah, I think a lot of those questions that you ask up front, right, interviewing your investors, is actually a good segue to our question, our main question here today, which is, when you're talking to investors, how do you help them separate, what their portfolio goals are, whether it's like the number of doors, equity, things like that, and
Hmm.
the lifestyle goals? Do you have those
Mm.
conversations with investors and how you kind of differentiate those two?
Oh, for sure. Absolutely. So that was part of my transition is single family houses, even having someone else manage them, the return on time is not so great.
Mhm.
And that's a long-term rental. Does anyone have a midterm or a short-term rental as a single family house?
Yeah.
Man, you just picked up a second job, which
Yeah.
is why even when I look at commercial real
Right,
estate,
Albert?
I
Yeah.
is that you, Albert?
Yes.
Yeah, I've got long term, mid term, short term, got them all.
Yeah. Oh, yeah. I want my time back. I've already like paid my sweat equity. I'm good. Like, I'll take another billboard, please.
Yeah, that's awesome.
So yeah, I ask people like, what's your return on time look like? And if they tell me like, I don't want to spend more than like 5 hours a month on my property, I'm like, great. You should not be looking at a storage unit. You should not be looking at self-storage. That's the second job until you can buy three and have someone PM it for you, property management.
There
Hmm.
you go. There you go.
Yeah. So yeah, there's parts of commercial real estate I stay away from in the same way that I stay away from short-term rentals.
Probably with wisdom behind that too. So, how do you as an investor and as an agent now you got your hands kind of full. How do you protect your time with that
Mm.
with the obligations you have?
Um, how do I protect my time? I jump right to the heart of things. Like
Hmm.
when I'm talking to clients that want to invest, I want to know faster and clearer how I can best utilize our conversation,
Yeah.
5 minutes, 30 minutes, an hour, and get to a really clear why is that important to you? If you didn't do that, what would it matter? If you did this in 3 years instead of today, what does it cost you?
Hmm.
Mm.
And some of those questions really get to an idea of they're wanting to invest in yesteryears and
Yeah.
instead of in today.
Hmm.
And some people actually have a really good idea of what today's market is and what the opportunity is. And it doesn't look like yesterday's market.
Right.
It has great opportunity, but you have to go look over here instead of over there.
Yeah.
So just want to know faster if this is something that I can be helpful with because not everything is this is not the same market as other places. We especially in Austin more so than Houston, we appreciate a lot more. So we're not
Yeah.
a heavy cash flow market.
A
And
little too
I
much, in
said
my
that
opinion.
before.
Yeah.
Yeah. Oh yeah. And as I've said before, I mean this market diversifies me. I mean, I didn't put all of my money in tech stocks and I also didn't put all my money in healthcare, you know.
Hmm.
So it's different markets that are performing differently.
Right.
Mm.
No, that's good. That's good. Um, so talking about lifestyle goals. So protecting your time, number one.
Mhm.
What about stress? How do you control stress? Because I mean, first of all, what's more stressful, dealing with your own deals or dealing with your clients' deals?
Um, my clients' deals. Yeah.
Interesting.
If I mess up my own money, that's something that I can figure out and solve later. If I mess up the deal for the client, they may not give me a chance to fix it for them.
Hmm. Yeah.
Mm.
So how do
Yeah.
you control that? Like, how do you
How do I
protect that?
manage stress? Let's go
Right.
back to that conversation. So, how do I manage stress? The gym. The gym is my outlet. I get all of the extra energy that's going on inside of me and it gets out and it gets released and it is glorious. Um,
Handstands.
handstands, lifting heavy and I don't know, you have to do cardio sometimes. So,
You can get
Yeah.
yeah,
a lot of thinking done too in the gym.
you do. You
Yeah.
do. Yes. Yeah. Let's go pick up something heavy and throw it around. It's very cathartic. Yeah,
Hmm.
that's how I manage stress. Um, I just say no to things that I can't help with. I mean, I cannot be superwoman. I'm not everything to everyone.
Yeah.
So having more clarity about when I can help and maybe it's not me. Maybe it's, you know,
Yeah.
Austin, the Houston market that's a better fit.
You and I were talking about scarcity mindset. And in order for
Mhm.
you to be comfortable saying no to things that are maybe good opportunities too, like I've heard you say before, it requires to have a plentiful mindset, not operating out of scarcity. I think that scarcity mindset leads a lot of investors and a lot of agents. And Albert, you can probably testify to this as well with your coaching clients. It leads us to want to say yes, to feel obligated to say yes, even to things that, and I am like the guiltiest. I mean, my first deal I should have said no to, but I did it anyways. I still learned, but it was very stressful. Not only was it stressful on me and my body, but it affected, my family. Also, it keeps us from being able to say yes to the right deal or the right opportunity when it comes along. So yeah, being good at saying no is 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 critical. Which, like you say, it requires you to have you mentioned clarity. It requires you to have clarity on what it is that you do want and wh- clarity on your what your buy box is.
Mhm.
And to take it even a step further, you mentioned even before that, it requires you to help your clients gain clarity on that as well. Because a lot of times, I mean, Albert, you find this to be true. We, all three of us are working with investors other than ourselves. Um, I get a lot of investors. They're all over the place. They're
Mhm.
wanting all
Mhm.
different types of assets. They're wanting, you know, there's if it's a good deal, just show it to me. And to me, that shows a lack of clarity.
Yeah, I think, sir, I think it's personality driven as well. You know, some people thrive in that type of, we would maybe call it chaos, or
Hmm.
lack of focus. They've got teams and processes in place. I mean, we're not talking about newbie investors, right? These are seasoned investors that have teams and processes in place where they can do a flip in Huffman and have short-term rentals in Freeport and Surfside and things like that, and they've got the teams and everything to run this business
Hmm.
and multiple arms of this business. For our students who are just coming into the game, typically, we give them this blueprint of, hey, here are specific zip codes, right? Let's focus on these zip codes here in this particular area of
Yeah.
Harris County. Don't We're not looking in Conroe and Kingwood and all of these outliers that are just, if you can't drive there in about 30 or 45 minutes,
Yeah.
in the beginning, you're probably gonna hate that project, because we're trying to teach people how to get out of the rat race, right? And get to financial freedom.
Mhm.
But then, like Megan was talking about before, if you're just creating another job for yourself and
Hmm.
now you've got to drive an hour there and an hour back,
Yeah.
that can just seem like a trudge. Now you're doing it for yourself this time instead of for someone else, right? You're building your own dream. But we typically, coach our students to just look for things that are within a 30, 45-minute drive that you don't mind going to, because you'll go more often, right? And take care of your projects more often. So,
Yeah.
and we teach them how to focus on specific markets. So then you can just look at a particular deal over time and know, okay, this is worth, more underwriting. This is worth more than just a napkin, calculations. Like, let's
Right.
dig into this.
Yeah. 100%. 100%. So, Meg, it's scaling too fast. So, um, we deal with a lot of investors that don't move. So,
Mhm.
this is really a two part question. Like, how do you know when somebody is moving too fast, and how do you get somebody to move that that is not English? I love that language. That's not somebody that's not moving quick enough. Like, how do you motivate somebody who's not moving, and how do you know when somebody's moving too fast? Maybe you have some examples of clients that maybe scale too fast or got ahead of themselves.
Um, the one that comes to mind is the client that scaled too slowly, that passed an opportunity because of analysis paralysis.
Mm.
Um, we wrote an offer. He took like we were back and forth encounters, and he ended up deciding, I think I need to sleep on it for another couple of days.
Mm,
And I sent him the it went under contract with someone else. I sent it back to him in 6 months and showed him what it went under contract for. Um, and it was lower than what he was expecting. And I asked him, like, can you run your numbers now? And he's like, wow, with that number, we would have been it would have been even better. And he's looking back at it and he's like, yeah, that like I should have really gotten that one. So um painting a picture is helpful to get someone into motion on the one that got away,
yeah,
Mm.
you know? Yeah. Yeah. People move away from pain more than they move towards pleasure.
that's
So
true.
if you can paint that picture of like, this is this is what we lost. Um, how much money did you lose by not taking this deal 6 months ago?
So you're able to go
Yeah.
back, run those numbers, and take it back to them, and then show them, hey, here's the opportunity you passed on, and here's how much money you could have made.
I shared enough of the numbers for them to be able to run it themselves. I ran numbers and lots of pro formas for clients for a very long time. I have Google Sheets and Google Sheets of pro formas that I made, and then I knew that there was a shift in clients that would run their own numbers
Yeah.
in addition to the ones that I was running. Those were the ones who moved. There's something about having someone do all the work for you versus having some
Okay.
skin in the game.
So
Yeah.
that's an interesting point. How do you motivate your clients to do their homework then instead of because
Yeah.
I think I've fallen into that where I feel like, hey, I nobody knows this market better than me. Let me run the numbers and then trust me. And that's not really like it's like close your eyes, taste this. How do you
Yeah.
motivate them?
Austin, you say you're looking for a good deal. How will you know a good deal if you find one?
If it makes money.
Excellent. Great. And how much money do you want it to make? Like average or better than average?
Well, what's average?
Well, we don't even know what average is. It sounds like we need to run some numbers. Do 10 pro formas on 10
Yeah.
properties, and we'll talk in 2 days.
Okay. So you just have them run their numbers.
Do.
Yeah,
I do.
putting the ball
And I
back
have
in their
built,
court. Yes.
yeah. And so I have built, especially for first-time investors, I have built pro formas, put it into a shared Google folder, and then said, here's the spreadsheet. You run 10 tabs, and then we'll look at it and we'll review however many. So it depends on if this is really the first time or not. I will do one together. It's a I do, we do, you do. And then when they have done one, I tell them I will go in and I will check your numbers. We got to look at the numbers before we look at that property or look at the house. It
Yeah.
doesn't make sense. So I'll look at your assumptions for property management, for how much property insurance is going to go up, and give you a heart check.
Hmm.
You don't know if it's good numbers because you haven't looked at the market.
Right. That's good. So coaching them
Yeah.
to be students of the market, which we've talked about plenty of times on the show, how important it is and there's just so much out there, so much to learn. And if you're not putting any time into it, it's really hard to make a confident decision too. I mean, you seem like a very trustworthy person, Megan, but at the same time, I think you're 100% correct. Investors need to do some of the work themselves in order to
They
be
do.
more confident about the decisions they're making. These are big choices, big
Mhm.
financial decisions to buy these properties.
Mhm.
How would you contrast investing in residential? So are you mainly focused on commercial these days as opposed to the residential side, or are you still kind of doing both?
I have a bit of both. I haven't bought anything residential for an investment in 5 years. Um, I've bought more commercial. I'm doing more of that return in equity. What's the analysis looking like? How much is this bringing me for how much equity I have in it?
Hmm.
Sometimes it makes more sense to do a cash out refinance because of where the market is. Sometimes it makes sense to sell it.
Yeah.
Hmm.
So are you finding the numbers are just working better, or do you feel like, with like there's is it more simple to manage and run the
Oh,
commercial
yeah.
side with the triple nets or
Oh, yeah. Oh, yeah. Well, the syndication, I sit in a call a few times a year. So that one's really simple. On the commercial side, I have a property manager on that as well. So, we get a report out. There's sometimes things that we have to look at. Um, and, we have an idea of the next thing that we sell for purchasing something else. And it will be selling something residential and buying probably office.
very
Buy
cool.
low, sell high. Yeah.
There you go.
So office has a little more vacancy right now. And I have an idea. I've been watching the market and the places that office is coming back to first. So I have a pretty small geographical area of what I want in office specifically. And I run the numbers. So when a good one shows up, I know what a good deal looks like. You have to be patient to be able to move fast.
Hmm. Love that. So as far as like office and commercial, how with news, like the news cycles with regard to commercial real estate over the last couple of years, right? They were talking about this big bust, I think that's been happening over the past couple of years. Are you seeing, I guess, in this smaller markets, these niches where you're looking, you're explaining there's an uptick now, or there's just more deals as values just continue to fall?
Yes. To both. There's an uptick of deals and value that's continuing to move forward. The trend that I'm noticing is office in the city center is has a higher vacancy. Some of those things are going to move back in, and what I'm seeing is the in the satellite communities around Austin,
Hmm.
um, Round Rock, Buda, Dripping Springs, Bastrop, the areas that have um, higher average income, those professionals are just moving their office to that community.
Okay.
So if that community has the socioeconomic bubble that allows someone to have a career where they need an office, they're moving their office to be in their community instead of moving it back into the metro.
That's an interesting trend. You feel
Mm.
like in Austin, in the Austin market, the office space is. Go
I
ahead.
I would be surprised if that trend didn't extend to other cities.
Yeah.
I would be surprised if that trend didn't, if you didn't find the area where a lot more of your um, attorneys and CPAs are living, if you
Hmm.
don't find that office in that area of Houston is also has a lower vacancy than the rest of the city.
Yes and no. What are office vacancies looking like in Austin? Because here in Houston, vacancies are still they're like around 20% vacancy in the office space in Houston.
Yeah, we're 12 to 18 depending on the pocket that you're in.
There's just a lot of inventory here. And
Mhm.
but yeah, there are a lot of people are making moves. That's interesting. You've noticed that trend that they're making moves to the more outlying areas. They're moving away from the inner city.
Mhm.
It really does seem like the office, like there's higher vacancy rates downtown than there are outside of the main part of the city when it comes to office. I don't know about retail, um, but office for sure. So um,
So our retail is leading the country in the lowest vacancy. We're at 2% for retail vacancy.
that's pretty low. We're I think we're at four, maybe
Yeah.
four and change right there. So that's really good. So what do you think's contributing to that? It's just rapid growth, or is it something else driving it? Are cost of construction
Right
being high
now,
and inventory's low?
well, not no, because we definitely built a lot of places for people to live, whether that's an apartment complex, condos, or homes. We built plenty of those. So um, I don't think that the trend for when you have 100, at one point we had 195 people moving to Austin every day. This is about 3 years ago. Right now we're at
Hmm.
around 160. We still have 160 people moving to the greater Austin area every day. Every day. That's like 60 households moving in every day, and that's the net, not the gross.
Oh wow.
Um, People need a place to live, and then they want a place to eat and get
Yeah.
groceries and shop. And there's not as much of that people also plan to build as they did just a place for someone to live. So
Right.
where are leading the country in the lowest retail vacancy, it is incredibly hard to find something, especially if it's second generation restaurant.
Right.
Yeah.
So with all the uncertainty that we're experiencing in our market, your clients are asking you right now, what are things going to look like? Are the interest rates going to come down? Is the market going to turn around, or is it going to be better? What are you telling your clients when they're asking you to look in your crystal ball and tell us what does 2026 have in store for the average real estate investor?
Oh, this answer changed from last week to this week, so I'm so glad I'm answering it this week and not last week. So I attended the Hayes Caldwell Economic 2026 forecast, and our guest speaker was the Federal Reserve Chair for Dallas. And he showed that there was a higher confidence value from the F1C and from blue chips that we would have 2 rate drops this year.
I'll take it. I'll take
So
it.
that is a much easier. I don't have to play my crystal ball. I am deciding a presentation from Federal Reserve Chair.
So how's that
Of
going to
course, he
affect?
doesn't know any better, but
How does that affect you and me and Albert?
hmm. Well, um, you know, rates are going to come down, and if rates come down, typically we see buyers come into the market.
Yeah.
If we have more buyers in the market, I don't know that prices are going to go up very much. I think we have a lot of inventory to consume through.
Yeah.
We need some buyers to meet the sellers where the sellers are at,
I feel that.
because it feels like our sellers have hit a floor of how low they will go.
Mhm.
Yeah, exactly. Yes. So, um, our sellers don't want to play limbo any longer, and we need some buyers to be hungry, hungry hippos and play that game instead.
Yeah.
Gobble up the inventory.
All right, Albert, last question.
Oh, last question. Oh man. You caught me.
Megan, you have so much to offer, and we gotta get you back on because we want to talk more about syndications. We do want to. We'll be doing a series later this year about different commercial asset types.
Mhm.
So we definitely want to have you back on for that. So super grateful for you and your time. We know things are busy and your time is valuable. Want to encourage everybody to find Megan Flake. What are your social media preferences? Your Albert's on everything. He's even on Zanga.
Okay.
So
So yeah, I'm Megan Flake in LinkedIn. I also am, I think Megan E. Flake in Instagram, and Megan Flake in Facebook. Thankfully, it's a little easier to spell and not a ton of me. So Meganflake.
well, appreciate your time. Thanks for being on this call. Thank you, everybody, for being on the live call. We streamed this to Facebook. This will be live on YouTube, Spotify, Apple Podcasts. So go back and listen. We will respond to your comments and everything. Don't forget to subscribe on YouTube. Hit the notification bell. Um, and don't forget, successful people, success leaves clues. So don't forget to go back to your goals. Like Megan was saying, are you tracking your net worth? Are you tracking your goals? Are you tracking your activity, daily activities? Does your calendar reflect those goals? So, and please share this episode. If you want to invite somebody to join the live call, send them my way. Shoot me a text, and we'll be back next Monday. Megan from Austin. I'm Austin
Thank
from
you, Megan.
Houston. This is Albert from Houston. Thank you for being on the call. And until next week, everybody, have an incredible rest of the week. Happy Monday.
Bye.
Thanks. Bye, guys. It was so great.